Welcome back to Good Day Orlando in your Consumer Corner. President Trump's first week in office having a big impact on the economy. This week, the Dow rose above 20,000 for the first time ever. But it's not all good news. We could see the cost of some products start to spike in the very near future. Certified Financial Planner Bert joining us this morning to talk more about it, fleshing out the good and the bad. Joe, good morning. Good to see you.
Good to be here.
So this is good news. The first time the Dow hit above 20,000.
130-year history, first time milestone.
What do you think?
Big time. Well, it's indicative of what the public thinks is going to happen in the economy. People are optimistic about jobs, about companies growing, and they're optimistic about the Trump programs and less taxation, regulation, litigation. In the long run, could be good.
Okay, so what are the downsides to it?
Well, the downsides are that you do foolish things, that you speculate, that you start putting all your money in the market, and especially money that you need in the short term, and that's the mistake that people make. You know, the animal instincts kick in. Everybody wants to get, reminds me of the dot-com boom kind of.
Yes,
you know, everybody's going to be another Warren Buffett. What you need is diversification and recognize that you can't time the market. Okay,
how long should we expect the Dow to stay kind of at these levels?
Well, you know, as Yogi Berra said, it's tough to make predictions, especially about the future. So heaven only knows. Markets never go straight up, but you expect a correction, a pullback. But in the long run, markets will continue to climb, and that's the secret of investing. You have to think long term. As I like to say, time will leach the volatility out of your portfolio. Investing, there's a difference between investing and speculating. Speculating is short term. People want to make a quick hit, and that's where most people get burned.
Okay, let's talk about President Trump's tax on Mexican imports. Lots of talk about how this might affect our economy. Yes.
Yeah, what he wants to do is pay for the wall.
Yes.
Another 20-25% tax on stuff coming in this country. We import about $300 billion a year coming from Mexico.
Really?
From Fords to avocados and everything in between. Yeah. And that's $75 billion of potential tax. And of course, the popular press says, the mainstream media says, that's going to cost us. We're going to have to pay for it. There's another side to the story. And the other side of the story is, and most people don't recognize this, and many economists agree, that with that tax is that we're also going to have a raising value of the dollar. So if the dollar goes up in value, if the dollar is worth more, it'll buy more. So that'll offset the tax somewhat and may offset it even more. But the popular press tells us, you know, we're all going to pay 25% more for avocados. In the long run, that's probably not the case. So just maintain your cool, don't panic, and let's see how this shakes. But once again, this is a trial balloon. You know, there's a lot of things on the table of how to pay for this wall. That was one of them, and that's really hit the news this week.
Well, I think when you talk about the value of the dollar, that's good business for all of us, isn't it?
Oh yeah, if you have a stronger dollar, you go anywhere in the world, buys more stuff. But of course, that makes our exports more expensive, and that can have an impact. So economics is a constantly moving thing. It's always dynamic. You know, you never know how it's going to shake out. But in the long run, I think if we have an import tax, it'll strengthen the dollar, and things will be maybe cheaper.
Okay, Joe, great advice. Where can people find you?
Once again, Google me, 2 words, Joe Bert, B-E-R-T.
Okay, there you go.
Thanks.